Welcome back for another Polygon Matic price prediction analysis video, and in this video I will be giving you areas that Matic needs to continue holding above in the next coming hours, and also give you my pullback target areas, and also share out my long-term Elliot wave analysis that I'm expecting to play out once the bull market is here. And at the time of this recording, Matic is slightly holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. And the moment we lose the 20-day MA, there are chances that Matic might continue seeing lower prices, and the next key area of support that we need to keep our eyes on lies at around the $0.784 mark. And as long as that key area of support continues to hold, there are chances that we can see another bounce back in case we see a pullback into that target. That is that key area of support. And starting the video by first sharing my long-term Elliot wave analysis before I can give you my short-term price action that I'm expecting to play out in the next coming hours. By jumping here on the daily chart, you can see that Matic back in 2020 gave us these lows down here before we saw that impulsive move taking us to all-time highs above the $2.9 mark, completing the formation of these Elliot wave count 1 to the upper side. And after seeing the formation of that first wave, we started a corrective structure in the formation of this wave 2 in a move that has now given us a pullback into the minimum target area for the second wave, highlighted on the charts using this red target area, which is an area that we have now fully maximized, and there are high chances that we now have a low in place for the second wave. And in the next coming weeks or maybe months, we can continue getting aggressive and see the start of an impulsive move to the upper side in the formation of this wave 3. And the minimum target areas for the third wave can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area for the third wave at the fib level 1.618, and that is above the $5.13 mark, which is the minimum that we can expect that wave 3 to the upper side to do. And jumping back to the 4-hour chart to give you my short-term Elliot wave analysis that I'm expecting to play out in the next coming hours, and also give you my pullback target areas, I want to continue with the video by first giving you a recap of what has been happening in the past few weeks, where you can see that on the 11th of September, Matic gave us a low at around the $0.5 mark before we saw this consolidation over here, and finally saw the breakout to the upper side, breaking above significant areas of resistances in a move that has now given us a high above the $0.98 mark in what we can term as an Elliot wave count 1 to the upper side. So we can term this whole structure to the upper side as a wave 1, and there are chances that we have not topped in the formation of this wave 1, and in the next coming hours we are going to see a bit of a pullback, or maybe in the next coming weeks we are going to see a bit of a pullback in the formation of this wave 2. And once we have a low in place for the second wave, Matic should continue seeing higher prices in the formation of this wave 3, then expect a wave 4 and then a wave 5 to the upper side. And using the Fibonacci's, connecting the fibs from the low of the first wave to the high of that wave 1, we can get a minimum target area for the second wave between the fib level 0.382 and the fib level 0.618, and that is between the $0.8024 mark and the $0.6859 mark, which is the area that I have highlighted on the chart using this red target area. And this is the area within which we can expect Matic to give us a pullback into, get a low in place for the second wave before we can continue seeing higher prices in the formation of that wave 3 to the upper side. And you can see that on the 17th of November we saw a bit of a pullback into the area, so a reaction of the fib level 0.382 giving us this bounce over here. And there are chances that whatever we are seeing at the moment is an ABC corrective structure where we can term these as a wave A. Then this could be the formation of that wave B before we can see one more new low in the formation of this wave C, completing the formation of the second wave. And once we have a low in place for the second wave, we can continue expecting higher prices in the formation of this wave 3 to the upper side. So that is what I'm keeping my eyes on here on the Matic chart on the short term and also on the long term. And I hope that video was of much help to you, and I hope to catch you in the next one.